That's a new feature, isn't it? I'm sure you all heard that, but I will just ask that that's okay for everybody, that we will be recording this session. Sorry, my connection dropped a little bit.
Candy, I've also got problems.
Yeah, I thought you were just ignoring me. I thought you were blanking me, Paul.
Yeah, apologies.
Are you doing it again?
Yeah, you're freezing up a little bit, Paul.
Yeah, well, just
To bow out, so I was really glad it's being recorded. So hopefully, will it be possible to watch the rest of the webinar?
Yeah, I think what Rosie will drop a note to everybody after with any sort of information and the link to the recording.
Thanks, that's great.
Thanks, Grant, for fielding that. I am back in the room, and my apologies. The internet connection's not been so great the last few minutes, but let's see how we get on. So yes, just to start off by saying we are recording this session, and we will be sharing it and circulating the slides as well that Josh and I will be speaking to once we finish. So that's all good. Okay. Yeah, so welcome everyone to this webinar on access to finance. It's part of the ERDF funded Escalate programme for Oxfordshire, which is managed by the wonderful OSEP Community Interest Company. And Aspire, in partnership with another community enterprise called Flows, is one of the 6 enterprise hubs that form the Escalate programme. And we have been tasked with working up this webinar in partnership with FX, and Josh kindly from FX is joining us today to help us to deliver this webinar on access to finance. So what I will do is I'm going to switch to the slideshow, but there may be a few more participants. So what I'll just do, Sophie, if it's okay, I'm going to add you as a co-host, and if you could just help to allow anybody in if I miss them while I'm doing the slides, that'd be great. Thank you. So I'm just going to share my screen. Right, can everybody see those slides? Still thumbs up and head nodding, brilliant, thank you very much. So, yeah, as I said, a warm welcome everybody. I'll speak more later in the webinar about OSEP and the Escalate programme, which I mentioned at the beginning, and because there is a lot of great support that you can continue to access through it above and beyond webinars such as this. And as I said, I'm very grateful to be joined today by what I call my special guest, which is Josh Brewer from FX, to co-deliver the webinar. Hi Josh, thank you.
Hi.
FX is also a founder member of OSEP, and we'll introduce ourselves properly in a minute, but first just some housekeeping. So as you can see, it's a recorded session. If I could ask you just to make sure you keep yourselves muted unless you want to ask a question, just to avoid that distracting background noise. But I'd be very keen to encourage attendees to remain in vision if possible. It just helps build that more friendlier, more community feel when we come off the slideshow. Yeah, to help with interactivity, just encouraging attendees you could ask your questions using the chat function. That'd be great. And then hopefully there'll be some comments and questions there that we can pick up on as we move through the webinar. It'd be very good as well to hear about your level of experience and understanding of accessing finance. Like, where are you at in your journey, and what are you hoping to get out of today? So maybe you could write some answers in the chat box when you have the moment on the right-hand side of your screen. It'd be good if you could just introduce yourself, your organisation, maybe a brief sentence about what experience you've had of accessing social finance before and what you're hoping to gain from today. That'd be great if you could share that. Thank you. So what will we achieve this morning? So having access to affordable finance is vital if you want to take your purposeful business or social enterprise to the next level. So hopefully that's the subject you've all come to attend to. Otherwise, please leave quietly from the side exit. In terms of what we hope to explore, there's 6 points we would like to take you through. First and foremost, what is finance? What is social finance? What are the practical steps you need to take to access these options? And what's on access to you in the here and now as well? What are the pros and cons that come with it? We've got some reflections we'd like to share with you around our own experiences of accessing different forms of finance, as well as a few other community enterprises in Oxford. I'm going to share a couple of short examples of that as well. And then importantly, explaining, well, how can OSEP help you, including on the Escalate programme in Oxfordshire? So many social enterprises have benefited recently from Oxfordshire LEP's Escalate programme Scale Up Grant Fund, but this has now closed to new applications. So we felt that's another reason why this it was timely to organise this webinar, so to understand what finance and support was out there now to help you on your journey. So before we dive in, just say a bit about myself and about Aspire. So for the last 7 years, I've had the privilege to be the CEO of what is an amazing homelessness and employment charity and social enterprise. So as a social enterprise, we trade, obviously. So about 35% of our 2.5 million income last year came through trading. And we have a wholly owned trading company called Aspire Enterprise Services, for which we provide professional services, grounds care, property maintenance, and more recently, recruitment and consultancy. We employ nearly 70 people across both entities. So we've got the usual business challenges of recruitment, retention, making the numbers stack up, etc. As a social enterprise, though, all of our trading profit is reinvested back into the charity and our charitable work. And over 40% of our workforce has what we term as lived experience of some of the disadvantages that the people experiencing who we're supporting for our charity are experiencing, such as rough sleeping or having experienced prison time. We're 20 years young this year. It's our 20th anniversary, so we've been around for a little while. And we're supporting about 2,000 people a year across all of our programs. And we've experienced quite significant growth in the last 7 years. So numbers wise, we're still what I'd call a large, small charity. So we were at 365,000 turnover 7 years ago, and last year we recorded a turnover of 2.5 million. So we achieved some of this growth and scaling through activating a trading subsidiary, which we set up in early 2019. And part of that journey was accessing different types of finance. So I'll elaborate on that later in the webinar. I also just want to take a short moment to introduce my colleague, Sophie. Maybe Sophie, you could give a wave. So Sophie is...
Morning, everyone.
Thanks, Sophie.
With the mask.
With the mask. So Sophie's our newly appointed head of Aspire's trading company and has been helping with the delivery of the Escalate programme on behalf of the Aspire Flows Hub. So maybe a familiar face to some. So just to say hello. And in more recent years, Aspire has helped to support the founding of exciting and new community enterprises. I think I can still call them new, in underused premises across the city. So two obvious examples for me are Makespace Oxford and Flows, the place in the park. And they've also accessed different forms of finance on their journey so far, and they're really inspiring, wonderful examples of community enterprise in action. Okay, I'm going to pass over to Josh to introduce himself and FX.
Hi everyone, I'm Josh Brewer. I'm the Senior Business Development Manager at FX. And for those of you that aren't familiar with FX, we're basically a crowdfunding platform. We're not-for-profit, and our mission is really to enable people-powered finance to be raised by purposeful organisations that deliver impact. And I guess it probably helps to sort of illustrate how this works. So we have about 20,000 people, investors, registered on our platform, and they want to invest their money so that they get a positive impact return from their investment, as well as a financial return. And alongside those people, we also have a number of partner organisations that want to invest alongside the crowd. includes people like People's Postcode Lottery, MCS Charitable Foundation. And the way it works is that we engage with a business if we feel that they're a right fit for the platform in terms of the impact they deliver and the business model that they have. Then we help them to bring an investment offer onto our platform to offer the opportunity to invest to the investors. And that can be either in the form of lending the business money through bonds or through loans, or through taking a stake in that business through the purchase of equity. And so hopefully what happens is that the business raises the money and then goes on to be able to use that money to deliver their impact or to increase their impact as well. And so we've been running since 2013. We've raised over 85 million pounds since then into about 100 different organisations. We also have a sister platform called Energize Africa, which is just basically focused on off-grid solar in sub-Saharan Africa and raising finance to deliver that, and managed to raise about 15 million pounds to date through that platform as well. So that's FX in a nutshell.
Thank you, Josh. And hopefully we can keep you on the line to start to introduce the sort of topic of the day. Like, what is social finance? What are the different types of sort of products and avenues on offer to people?
Yeah, sure. So basically, social finance is investment. So it's the provision of repayable funds, often with interest. The idea being that it's to help charities or social enterprises be able to increase their impact. So there might be a requirement to grow the business either through purchasing an asset or provide working capital. And so there's finances needed in order to deliver that. So it's key to know that social finance is not a grant or a donation. It can be blended with grants, but ultimately, it's an investment. And the key thing about an investment is investors are going to want two things. They're going to want their money back eventually, and they're going to want some form of return. So that could be, annual interest, for example. So two main types of investment on offer. One is borrowing or debt, and one is shares or equity. So, with lending, you agree to take out a loan, which is going to be paid over a set period of time. Most of these debt investments are paid back with interest. There's quite a big kind of social finance network out there, a number of funds that provide lending, Big Issue Invest, Key Fund, Social and Sustainable Capital are all examples of organisations that do that, and that are specifically focused on the social finance space. And then the other option is the issuing of shares, which is basically you're selling a part of the organisation to an investor. So equity investors receive a share of any profits that are paid out by the organisation and get to have a say in how that organisation is run. There's some good resources online on social investment. I think Good Finance is a very comprehensive kind of list of social finance types and also providers. And yeah, as Mel says, there's a great little video on that there. There are other funding options as well. So obviously there's conventional finance. You can go to a bank, a loan or maybe a mortgage. There's kind of soft loans or from friends and family. And we often see that in early stages of social enterprises. There's grants. There's the business's own reserves itself. And there's also reward-based crowdfunding. And I think, again, in the kind of startup phase, I think this is often useful for organizations to raise, if you're looking to raise less than £20,000, for example. One of the key things I think to say about FX is that, there is an initial hurdle rate. So it doesn't really make sense financially for a business to raise less than £120,000 with FX, but that can then go up to over 5 million. Yeah, so that's the kind of background on social finance.
Thanks, Josh. Let me just go to the next slide. So Perhaps just we could go into a little bit more detail about those specific different forms of finance available. Can you just say a little bit about the different types of borrowing or shares, and what's the difference, for example, between a charity bond and a blended product?
Yeah, sure. So, so a blended product is where you have a part grant and often a part loan as a sort of as a single product. And this is something that was issued by the Access Fund in the past. I'm not aware if there are other providers doing this at the moment. I know Access is working up quite a few proposals on how to blend, social finance with grants to make it more flexible and long term. But I mean, Mel, you might know of other examples at the moment where there's blended products on offer. A charity bond, so I mean, this just basically means a bond that's issued by a charity, and it's not just charities. It could be any kind of social enterprise. It could be a KIC. It could be a community benefit society. It could even be like a company limited by shares or by guarantee as well. The key thing about a bond is anyone can invest. There's a fixed time period that bond lasts for, and interest is payable usually annually on that bond. And really fundamentally, it's a way for a lot of people to lend to a business. And it's quite popular, certainly with crowd investors. So where we see bond issues on the platform, they tend to fill quite quickly. I think investors like the fact that there's a defined end to the investment, and there's a defined exit for them, a defined amount of return that's paid. And there are also the possibility of putting it in something like an innovative finance ISA, which is a tax efficient way of holding that bond. And then there are a couple of types of loans. So you've got secured loans. This is where you have security against an asset, for example, a building. And unsecured loans. So there's no security against an asset. Obviously, from an investment perspective, and something that's secured is more attractive than something that's unsecured. And then we come to equity. So when people think of shares, the ordinary type of shares are those issued by companies. You might like see them listed on the FTSE, for example. You can have them listed, sort of any company limited by shares can issue shares. And this is where someone takes a stake in the business. They hope that they might be able to actually get some benefit from the value of that share appreciating over time. And there's also those investors, dependent on the size of their shareholding, have a say in that business. And the key thing on equity investments is, an investor is often looking to understand how they will exit that investment further down the line. And then we come to community shares, and community shares they're only issuable by community benefit societies and cooperatives, a very specific share type. But they do have a lot of benefits to those organisations as a type of finance. They're long-term. They're normally structured to be a 20-year investment, for example. They're very flexible. In terms of repaying the capital or making interest payments, it's at the behest of the directors as to whether or not they make those payments. And if it will financially destabilise the business, then it's completely within their right to not make those payments. They don't appreciate in value. They just keep their face value unless they might be discounted if they're written down, if the organisation got into financial difficulty. And they have a target interest normally that was payable each year, an amount of return to investors. And they're withdrawable, which means that when an investor wants to get their money back, they make a request to withdraw that share to the business. But as I said, it's if that would financially destabilise the business, then the directors are within their rights to say, well, we can't repay that amount, or we can't repay that full amount, but maybe we repay it over a number of years. And then what sits across all of these, in terms from an investment perspective, is there are different tax reliefs available. And obviously, where there are tax reliefs available, this is attractive certainly to a retail investor, the sort of investor we have on FX. So for shares, you can have SEIS and EIS, which are the Enterprise Investment Scheme tax reliefs. There is social investment tax relief, which is available to charities.
Olá, eu sou Eric Santana, sou designer gráfico especialista em animação.
Sorry, can you mute if you're
Trabalho com criação, principalmente com motion.
Sorry.
I'm not
Yeah.
quite sure who that is.
No, right, okay. Yeah, so as I was saying, SITR is available to community benefit societies, KICs and charities. And this is available on either debt or equity. And then lastly, just on debts for bonds, there's also the Innovative Finance ISA, which I mentioned.
Brilliant. Brilliant. Thanks, Josh. Thank you for
Okay.
that comprehensive run through. I think it's just really important there to sort of set the landscape of what can be meant by different forms of finance that are available to social enterprises and charities. And I guess the next critical step of that is understanding, well, what are the basic steps one needs to take, being a purposeful business, being a charity, being a social enterprise? What do you need to take to be investment ready? And Josh, there's a helpful sort of 8-step summary on the FX website, which we've brought to the slide deck here. Would you mind running through those, please? And then what we'll do after that, I will highlight some local examples of how community and social enterprises have accessed finance, and talking about some of the different products that Josh has mentioned. And then I think we'll be able to move into a more sort of discursive sharing of learning stage of the webinar beyond that. So that's okay, Josh, over to you again.
Okay, yeah, thanks, Paul. Yeah, so this is something we, as Paul says, it's something we have on the ethics platform. It's, this has been designed for organizations thinking about doing a crowdfunding raise, but actually all of this is relevant for anyone looking to raise social finance. Actually, these are all key elements if you're going to an investor and asking them for money. Fundamentally, you have to have a registered organization that has the correct rules in place in order to issue the type of finance that you're hoping to issue. You'll want to have a good team in place. Investors want to see a strong management team, that there's a variety of skills and experience that are really relevant to that business. Social finance providers do like to see people from a range of different backgrounds as well on the board of a social enterprise. And this is really important. If you can have someone in there with strong financial experience on the team, that provides a level of assurance to an investor. And that leads into, in order to be able to go out and take on investment, you're going to have a robust financial model in place. That financial model is going to show that you have a viable business, that you've got realistic forecasts on how that business is going to grow, and that you have a plan in place and a model in place that's going to allow you to pay a return and to repay investors their capital eventually. And so sort of key to this is actually, have a sustainable level of return that you're projected to pay. So when you're looking in crowdfunding, I would say that the return rate is probably in the range of 2 to 6% payable by the organisation, and on top of that there may be tax reliefs as well for investors, so that increases their return. When you look in the sort of social finance place around loans, I think the interest rates tend to be a bit higher than that. Yeah, rally your troops. I think for a crowdfunding campaign, the single most important determinant of success is having a group of engaged stakeholders beforehand that are going to come in and support your offer. And this comes down to basic crowd behavior. If an offer goes on the platform and it's on zero and no money goes into that, then our broader crowd are not going to invest in that organisation, really. But if something goes up there and money starts to go in from the start, that just demonstrates that, okay, there's a group of stakeholders that want to support that business, that validates that organisation, and then other investors will just follow that investment in. But again, also, rallying people to have strong advocates for the business is important if you're going for other types of social finance as well.
Yeah, sounds a common approach is having that snowball effect, really sort of working up in advance to have that strategy of engaging a broad base of investors. Thanks, Josh. I'll just move to the next slide.
Yep.
There you go.
Yeah, choose the right sort of investment for you. So it's a question, you know, as I said, the two main types, one is equity, one is debt. So equity, you know, is lower risk for the organization. It's more flexible. There isn't a commitment to pay a return. But conversely, it's higher risk for investors. You're at the back of the queue when it comes to getting money back out again. And you've got no claim on the income from that business in terms of a contract around interest rates. Loans, on the other hand, they are, you know, they are less flexible for the business. You are signing up to pay a certain set amount each year and to repay that money in a particular specific place and time. They are good for being able to raise finance quite quickly. And it is good for organizations that want to maintain more control, because obviously with the issuing of equity, you dilute your control of that organization. Yeah, prepare your documents. For a crowdfunding offer, you'll need to have an offer document which will need to cover the really key parts of your business around your governance, your people, your impact, your finance, but it also needs to really sell that business. It needs to have nice, engaging pictures of it with people. I work a lot with community energy organizations. I have seen a lot of photos of solar panels that really doesn't engage people, but someone standing next to a solar panel actually does. So you know, think about the way in which you want to present your information so that it appeals to the crowd. Yeah, consider what the mix and what's suitable for you as an organization. Larger, more complex offers, you might want to have a blend of finance. So, you know, we've often worked on offers, say there's a purchase of an asset such as a building, there might be a mortgage in there. There might be some maybe junior loan in there from someone like CAF. There might be some equity in there from a crowdfunding campaign, and there might even be some grant in there. You know, it's very often that there's a blended approach. So just work through, you know, what mix works for you. And then, yes, the other thing is, if you're doing a crowdfunding campaign, and I think also if you're going to social finance providers, you know, try and remove some of the risks beforehand. So not having planning permission is a massive risk for an investor. You know, if you can get that in place before you take your offer out, then that's great. Equally, as I say, work with a lot of community energy organizations. If they've got that grid connection in place and agreed and contracted, then that's fantastic. But this could also just be, you know, if you're working with local authorities, have contracts in place with local authorities, you know, have those signed contracts beforehand, rather than that's something that needs to take place later on, because that just de-risks the investment from an investor perspective.
Great, thank you, Josh. And I'll be sharing on screen in a little bit an example of the prospectus that Aspire used to raise social investment, make a raise through social investment tax relief. And I'm pleased to say it comes with pictures of people as well. Thanks for the tip.
Yeah, good.
So I said I'd spend a little bit of time talking about some local examples of different ways organizations of really quite varying sizes and needs and purposes have you know, attempted to use finance to scale. So start off with the micro, you know, look at organizations which are unincorporated. So Syrian Sisters is a good example, based in the sort of Rose Hill area of Oxford. They engaged with a series of small crowdfunders and then also benefited from micro grants as well. And what they've been able to achieve through these sort of, you know, typically sort of anywhere between £1,000 to £10,000 coming through. Yeah, that's the sort of size we're typically talking about, but not exclusively, when crowdfunding can be much bigger. I'm sure Josh can give more detail on that. But, you know, the kind of, yeah, Aspire through its enterprise development program also supported the Syrian Sisters with a 2K micro grant. And that's enabled that kind of finance has enabled them to set up a catering enterprise with a lot of brilliant support as well from Flows, the place in the park, called Damascus Rose Kitchen, as a community interest company. Then if I look at Aspire, and I'll go into a bit more detail on this example in a minute, but so we have our wholly owned trading company owned by our charity. We undertook social investment tax relief to as we took advantage of that offer to help us to borrow £50,000 from 6 investors, 6 people local to Oxford who really understood and cared about our mission. It's very affordable, or it's worked out very affordable for us. It's a 6-year repayment term. It's at 1% interest, so it's hard to beat for us in terms of having what is a relatively small but important amount of investment funding. But the clear benefit for those individuals, aside from feeling good about supporting a local social enterprise, of course, is that they get 30% tax relief. So that's really, if I'm honest, I think that's what brought most of them on board. And yeah, we're the social investment tax relief is set up in such a way that you have a 3-year holiday period before you start repaying the borrowing. So we are entering into year 4 where we start repayment next year. And we use that fund to really help us to scale up our enterprise activities at the time. I think it's also important to say that you don't have to access finance to scale, and Yellow Submarine, wonderful organization, now runs various cafes and catering services in Oxfordshire. They have just gone through a process. All they've gone through is through approaching trusts and foundations for pump prime revenue grants and using their own reserves to scale, and that's worked perfectly well for them to continue to do that through their charity model. I think there may be others better placed to talk about flows on this call, but I'm going to say it anyway. A wonderful community benefit society, and had the support of FX, who I think unusually went for a slightly smaller community share offer support because it's such a fantastic local enterprise, and we're able to raise £34,000 from the community, which in turn was then match funded by Co-ops UK and Power to Change to reach a target of 50k. So that speaks to that important point of having the mix right, and you can go to a community share offer for local people, but then also approach larger organisations to help match, and it's getting that mix right actually, which is often what makes it successful. Moving across to MakeSpace, a community interest company, of which I am one of the directors. We've benefited significantly from these unsecured soft loans approach, so where we've approached individuals and organizations who are very supportive of our mission, and they've arranged for these sort of £10,000 to £100,000 loan arrangements that we are repaying over an agreed time period, but between 0 and 4% interest on those, and that's given us very affordable finance to scale, and also for MakeSpace to be able to respond so quickly, for example, to take what's called the Meanwhile in Oxfordshire programme contract, to multiply the MakeSpace approach across the county into empty premises. Co-ops as well can benefit from a number of these products, and so Transition by Design is a great local co-op, up for Co-op of the Year. I think you can still vote for them, and they've taken advantage of the bounce back loan scheme. I think it's a good example, perhaps a much more affordable version of a high street bank loan, but still giving an example of that different type of product. I'll defer to Josh to speak about the community share offer for Low Carbon Hub. I think the point I'm trying to make is that community share offers can benefit the small as well as the large, and it's really impressive impact there. So I'll pass to Josh in a second, but I just want to talk about Greater Change Community Interest Company at the bottom there, who are supported by Aspire originally in an incubation phase, but they were able to secure blended finance through Homeless Link awarded a social investment loan of £80,000 with a grant of £20,000. And that was to grow their organisation beyond the initial pilot phase. And they had a repayment term of 48 months, and the interest rate was set at 8%. So, yeah, it's very attractive for them, and they had a robust business plan and model that gave them the confidence that they could pay that finance back, and that has been successful. They have paid that back, and they've continued to flourish and grow as a result. Josh, did you want to pick up on the low carbon hub?
Yeah, actually, just to mention on Greater Change, so they are now talking to FX about potentially doing something around an equity issue to scale the business and to grow the business. So it shows how you can use a variety of different social finance forms to move through the different growth phases for the business. And I think Low Carbon Hub is a good example of that as well. So they're an Oxford-based organisation. They're looking to install more renewable energy assets across the county. And they started off probably 2015, 2016, something like that, with a share issue to do some rooftop PV. And they've just gone from strength to strength. And so now they're in a situation whereby, I think originally they were raising quite a lot of money, about £1 million, but they managed to do that. But what they've done is they've got a really good track record of delivering the projects that they've raised the money for, and then paying investors the return as well. And so now they are able to list on the platform, and on FX, they listed at the end of last year with a target of £1.5 million. And they raised £3 million. And the reason for that is because investors like to see that track record, and they like to see organizations that are doing what they say they're going to do, and actually paying what they say they're going to pay, and that you build a kind of sort of virtuous circle relationship with those investors. An investor who came in originally will come back and support that organization more when they need more investment. And just in terms of blended finance, now they're in a position where they are able to borrow short-term loans from the county council, so that they can move quickly when an opportunity arises. They can then refinance those loans out using community shares, and then they can use those community shares to leverage in grant funding from grant bodies to do bigger projects. So it just shows how you can sort of scale over time and then use kind of social finance to leverage in other forms of monies as well.
Thanks, Josh. Yes, it's good example of how finance can beget finance, and I think that's something where the environmental enterprise sector has done very well, and there's a lot of learning and I hope support that can be given to more sort of typically traditional sort of social justice, social enterprise, should I say, where there's a bit more behind the curve, but could benefit hugely from learning some of those approaches. Great. I will move to the next slide, and I promise it's not entirely death by PowerPoint, but I just want to share a bit of Aspire's specific learning from some of the scaling that we've done, and then part of that I'll also bring up on screen the investment proposition that we took out to investors, and then what we'll do after that is take a short screen break, and then when we come back, it'd be good to explore what are the different forms of finance that are available in the here and now, and also to sort of hear a bit more from you as participants about how does the information you've heard this morning sit with you, hearing more about the options that are available now, how does that feel for you, and how appropriate they are, and it'd be good to then think, well, how can we then follow on with you to support you to take those next steps, including through support from the Escalate program. So that's sort of where we're going with this. And just to say, there's been some really good examples of resources shared. There is a slide towards the end which sets out some really good next steps on advice and guidance too. So just in terms of a bit of learning from our practical experience. So as I mentioned at the beginning, Aspire is a charity which has a wholly owned trading subsidiary through which we do our commercial trading activity. So we benefited initially from a similar approach to, as I articulated, that Yellow Submarine undertook. We went to trusts and foundations for revenue grants to pump prime new activity, and we redeployed some of the surplus we were making as well. We also benefited from other Oxfordshire-led grants that were available at the time to invest in that sort of scaling activity. But then we wanted to go further and faster that, and we wanted to have a more commercial undertaking to how we were growing the trading company as well. So we sought to raise £50,000, what we felt was a very affordable amount that we could, wasn't taking too much risk. We were confident about taking on that amount as a loan, and we wanted to go about doing it properly. We did end up raising 50k from 6 investors who were all local individuals, and as I said before, that was repaid or repayable over a 6-year period of only 1% interest, so it is very affordable finance. And we reflecting on it, we followed those 8 basic steps that Josh outlined earlier. They were all very much applicable to how we undertook that. We were fortunate at the time that we were able to do this after undertaking an investment readiness support program. So there was a program at the time called Big Potential, which is operated by the Social Investment Business Group. I would talk next about what's around now and what kind of similar support packages are available as to what we undertook. But basically that helped us to explore the various social finance options, to develop a multi-year business plan which had which was much more robust and detailed than anything we've done before, and to build an investment proposition. And then we also received some support to pull together the paperwork which you need to approach and complete with investors when you get to sign on the line. And ultimately, we chose the social investment tax relief approach over the typical social finance providers. We did talk to and meet with Big Issue Invest, with SASC, Social and Sustainable Capital, and they were willing and keen to support us and very supportive of our mission. And I should say that as well, actually, that these funders, they do want to see social enterprise succeed, and they do want to be as flexible as they can within the constraints they're operating. But equally, you have to respect that they do have a rate of return that they need to attach to their loans. And ultimately, social investment tax relief, because we're able to provide investors with that 30% relief through that scheme, it was and therefore reduce the level of interest that we then had to pay back just to effectively 1%. It was just a far more affordable product for us, and plus we had the relationships locally to make that happen. So that's why we decided to go down that route over and above working with the likes of Big Issue Invest or Key Fund at the time. I'm going to attempt to change the screen share to the investment prospectus, so bear with me. Let's try this. There we go. Can everybody see that? Brilliant. So we developed this prospectus called Investing in Enterprise. Some lovely photos of Aspire people, very happy and exuberant about being part of a social enterprise, I dare say. And yeah, that was particularly helpful when we're approaching people in our local area, because they sometimes they would recognize the brand already, or they could see how this was a very local initiative that was supporting people in its area. They could see the social return just from the photos. We did obviously not just rely on that. We had some explanation about who we are, what we do, how Aspire is composed, what our areas of activity are. We talked about the sort of the reach in terms of numbers of our charitable programs, where we were operating across the county. We had some key financials at the time as well. And then we set out a very basic investment proposal of how we were wanting to raise a certain amount through debt financing, through SITR, what the terms of the loan are, and how, the projected return of 8.68%, bringing in that tax relief, and just how that was obviously, one would hope, very attractive to prospective investors. And doing it in a way, I hope it comes across as professional and suitably attractive, that investors were reassured that we were taking this seriously. We knew what we were doing. We would also share with them our multi-year business plan that sat alongside this investment proposal. And that's ultimately what, including working on those relationships, what got that over the line. So I'm going to pause sharing. Oh, I'm going to stop sharing even. There we go. So I hope that's been a helpful sort of initial exploration about what is finance, social finance, what are the different types, what do you have to have in mind, and sharing a few local examples of that too. I think what we'll do now is we just take a short break. So on my clock it's 10:47. So if we say 5 minutes, say 10:52. I won't chuck you off if you're not back by 10:53, but please do try. And then I will facilitate a conversation with Josh around what's available now, and then it'd be really good to bring more of you into the conversation and hear about how is it landing with you and what would you like to explore from there. So I'll see you in 5 minutes. Thank you. There you have it. So that's a very abrupt way of prompting people to come back to the webinar as well, isn't it? So thank you, everybody. What we will do now is focus on what are the different forms of finance available now, and then from there it'd be really good to go into more of a discussion with you around where this sits with you and where you're at on your current journey, and then we'll just briefly go back to the slide deck towards the end to sort of share further advice and guidance and talk a little bit more about the Escalate program and next steps on that front. So, Josh, given you're the resident expert, I have some questions for you.
Go ahead, Paul.
So, I think one of the areas that's been most interesting is around the match funding, and the potential to blend as well. So, what are the types of match funding with investment raise that are available at the moment?
Yeah, so this is something that I think we're seeing increasingly taking place, is that you have organisations that want to invest into social enterprises or profit with purpose businesses or purposeful organisations, but they want to invest alongside the crowd because there's a kind of validation of that organisation from the crowd investment. And so, for example, on ethics at the moment, we've got a pot of monies from the People's Postcode Lottery. They've got a very broad remit of organisations and themes they want to invest in, and they'll invest between £10,000 and £50,000. And then we have a couple of more kind of focused investors too. So we have CO2 Sense and MCS Foundation, who both invest through a kind of climate change mitigation lens. So they'll invest into organisations that are reducing carbon emissions, or providing sustainable transport solutions, that kind of thing. But we also see, as you said, the experience of flows. There's the Power to Change booster program out there, which provides match funding, and alongside Power to Change, there's also the Architectural Heritage Fund that does investment through the booster, and that's much more around kind of like place-based offers, particularly around high streets or specific buildings. But it's an area we're seeing a lot of interest in, actually, and I think probably looking forward, we're likely to see more corporates getting into this space as well, because it's a way for them to kind of deliver against some of their CSR commitments. Yeah,
that's a really good place to end it on that question with regards to the role of potentially what role could corporates play in supporting this space. That's a really good point. And do you know if there are any of these of investment options that come with a blend with the grant? So we heard about how Greater Change benefited from a loan and grant approach earlier. Is there something like that from the Access Fund?
Yeah, so I've got to say this is not my area of expertise, but what I'm aware of, so there's Access Fund, which was basically had a program called the Growth Fund, which was a mix of grant and loan investments. My understanding is that is now fully committed, that fund. I think so, but what I do know that Access is working with quite a lot of organisations to develop more flexible and long-term investment options for social enterprises and impactful organisations, and to do that through layering in grant with other types of social finance investment. I think there is that certainly coming along, and there are some sort of specific, and this maybe overlaps a little bit into the investment readiness piece, but for example, the Booster Fund programme provides a shot of grant, investment readiness grants, to get organisations who are doing community share issues so that they can achieve the standard mark, community share standard mark, which is the sort of gold standard for share offer documents. And then once you've achieved that, that opens the door to match funding from Power to Change or from the Architectural Heritage Fund via the Booster Fund.
Right. So yeah, so there is some investment readiness support attached to the Booster program for Power to Change. Got you.
Yeah.
Okay.
Yeah, that's right.
And can you tell us a bit more of if there are any other different investment readiness programs that are active at the moment?
Yeah, so probably, I mean, the biggest of these is the Reach Fund. Again, this comes from Access. So this is, a pot of grant monies for investment readiness, can be up to £15,000 in total. And the way this works is there are a number of social finance providers who are called contact points. And so an organisation decides that they want to work with that finance provider, they need some investment readiness. So they go through a process with that contact point to put in an application to Reach. And then what that means is that that organisation gets the grants, but they're making a commitment to raise finance from that contact point. I thought it was an incredibly successful programme, to the point, unfortunately, that ethics has now spent all of its allocation under the Reach grant. But there's it's being appraised at the moment, that programme, and I mean, our hope is that grant pot will be refreshed by Access probably in October this year. There are still some contact points out there that have Reach allocation, so it's probably worth looking. If you go, there's a Reach grant site on, I think it's on the Social Investment Business website. It's worth going in there and just taking a look at who the contact points are. That's
great. And actually, I think that there's a link to the Reach Fund on the further advice and guidance slide in the deck that we'll share out as well.
Yeah.
Thank you. And I guess a big area to sort of unpick a bit more is around these government-backed finance schemes. So you've mentioned, and I've mentioned, social investment tax relief and the sort of EIS scheme. Can you say, sort of, should social enterprises be pursuing these, and what makes them attractive?
I absolutely think, well, if social enterprises want to raise money from ordinary investors, so these schemes, they don't really apply to organisations. There is one exception to that, which is the community investment tax relief, but that's very specifically for community development finance investment providers. So yes, it's relevant for retail investors. It's possible to get quite generous tax reliefs on their investment. So the kind of traditional one, and this is for all kind of early stage equity that qualifies, is the enterprise investment schemes. So one of these seed enterprise investment scheme, and then the straight enterprise investment scheme, referred to as SEIS and EIS. SEIS is for the first £150,000 raised by the business. The business needs to be trading for less than 2 years. It's a really generous tax relief. It's a 50% tax relief, and there's 20-odd% loss relief on it as well. So it really stacks up well for investors. And then the follow-on to that is the enterprise investment scheme, which has a 30% tax relief and has some loss relief on that too. Now this, traditionally this is applied to ordinary equity, but it can be applied to community shares as well. We've had quite a few offers on FX where community shares issuers have been claiming these types of, issuing these types of reliefs, and that's been popular. And then there's the very specific to the space social investment tax relief, which is for community interest companies, charities, community benefit societies. I'm very conscious we've got Mel on here, who's the total expert on this, but I'll try and talk through this. Again, it's a generous relief. It's 30% for investors. Interestingly, it can apply to both equity and debt. And that ability to apply to debt is a real game changer for some investor groups, actually. And so it's really worth looking at. It was scheduled to expire. There was a sunset clause on the legislation. It was due to expire this year, at the end of the financial year, but I was really pleased to see there was a 2-year extension on it. And due to, in no small part, a lot of great campaigning from Mel and other people involved with the campaign. I think there are some issues with it, particularly as it relates to social enterprises. And unfortunately, there are a couple of exclusions in there. One is around property, another is around leasing, and another is around energy generation. And these are really like kind of core areas for a lot of social enterprises. So there's still a campaign going on to get, to get the relief reformed and maybe even more fit for purpose. But it is, if you're thinking of taking an investment out to the crowd, SITR is great. And then lastly, where an organisation is issuing a bond, if you're doing that through someone like FX, which is a platform, and that platform has the capability for that bond to be held in an innovative finance ISA, then the interest payments on that bond are tax-free. So it's worthwhile for investors to be able to put that bond into that wrapper.
That's great.
But yeah, I think those are the main sort of tax relief schemes that I'm aware of. I mean, there's a whole range of other government schemes around providing tax reliefs to social enterprises and other bodies, but I'm not really the expert on that. So I'll pass on that.
That's great. Thanks, Josh. And so there appears to be still a diversity of these sort of scale-up monies available in some investment readiness support. What is there available when it comes to seed funding or micro grants that you're aware of?
Yeah, so again, I mean, I think, again, this isn't really my area of expertise, but there's a whole range of organisations, trusts, foundations, bodies set up providing, small startup grants. I mean, obviously, I think Power to Change is still doing some of their programs, although I think they've moved a lot to sort of COVID recovery, but hopefully they'll be able to move back into providing some of those things like the Bright Ideas Fund, I think it was, which is some of the startup. But there are also, there are other things to think about. Rewards crowdfunding, I mentioned it earlier. That's a really good way to get some sort of initial capital into an organisation. It gets us support, and actually, it's quite a nice way to do that initially, and then maybe think to move on to a community share issue later on. But because you kind of build that group of investors out and that crowd out. There's soft loans from friends and family, and that's a very traditional route for a lot of organisations. I think the impact space is becoming increasingly of interest to angel investors and to angel networks and to like family trusts and foundations. And so normally these are investment focused, but I think they're increasingly looking at impact and they're looking to try and get impact from their investments. And so I think that's a real space to keep an eye on. And then there are incubators. So Green Ventures is an organisation which does, tech for good organisations, and they provide a whole load of business development support at an early stage, about £20,000 worth. Now they take a 6% stake in the business in return for that, but they provide a really good sort of like long-running program and provide a lot of expertise to get organisations off the ground if they're in that kind of tech for good space. And I think there are other incubators, mostly tech focused, but I think you might start to see some impact incubators developing as well.
That's great. Thank you, Josh. Yeah, and just say, I know Flows, the Place in the Park, benefited from the Bright Ideas Fund grants. And Broken Spoke Bike Co-op, many of you will know about. They ran a very successful reward-based crowdfunding campaign, which helped them to move premises and expand their operation in Oxford as well. So, yeah, brilliant. Thanks, Josh. That's a really good run through. Hopefully that sets the scene. I know there's been some great contributions on the chat. Thank you particularly, Mel, for your expertise and insight. If it's helpful, I can open the floor for a short while. If anybody would like to pose any questions or reflections to Josh and I. Otherwise, I'm very happy to sort of just pick up on some of the points from the chat. Tim? Hi, Tim.
Morning. Sorry, I was slightly working away as well, busily listening. Paul, and I may be being dumb. Can you explain what you mean by pump prime? You're just talking about seed funding. Is that the same thing? Is that what you're saying?
Yeah, it is. It is. So it's saying going for typically a multi-year revenue grant that tapers off year on year and is replaced by income that you're generating from your new venture.
So that's the one that probably would be most appropriate to my current gig, if you know what I mean. So yeah, I'll maybe need to talk to you a little bit more about that. Thank you.
Yeah, very happy to.
Just thinking about actually grants as well, blended grants. Just there are programs like the Innovate program, you know, where there's often a big shot of grant funding available, but the organisation often needs to raise finance alongside that grant funding to trigger that grant funding. So that's one of the sort of blended approaches as well.
Thanks, Josh. I'm going to go to James and then Grant. So over to you, James.
Yeah, quick question. Really about social impact bonds and the opportunity. Obviously, people who know Sophia, it's a charity, not a social enterprise. So therefore, the issue of shares that are contributing returns around equity are different. But it just feels as though some of the contracts that we have are relevant, particularly some of the work with the police, where we're saving significant amounts of money to the public sector and statutory providers, could be shared in a social impact bond model. But my experience over my time has been that they've not really worked as well as they were forecast to. And maybe the market has changed. I was wondering, Josh, if you've got any thoughts on whether the market is now more accepting of SIBs with a long-term sort of 5, 6, 7 year repayment model, which goes beyond the 1 year budget and the 4 year political term.
Yeah, I mean, I think I would say here that Big Society Capital have done a load of work on social impact bonds, actually some really good research there that's come out of BSc on that. So I think it's worth flagging that up to take a look at that. We've not listed a SIB on FX, and one of the issues that we come up against is they're very complex structures in terms of the relationship between the investor, the business, and the organisation that's buying in the service. And I think being able to try and unpick that so that it works on a crowdfunding platform, we haven't really been able to do that really to date. And I think it probably needs some innovation within the space about developing instruments that can run off a SIB and that are quite easy to take out to a crowd, that don't bring in this sort of, there's quite a governance process between the investor and the investee that a normal crowd investor just is not going to want to get involved into. And I don't know, it's possible to, I'm just thinking off the top of my head, if in some ways to develop nominee structures to do this, whereby you could have an organisation who is willing to take on that overhead of managing that investment, and that they then are basically hold the investment on behalf of a number of crowd investors potentially. I don't know if that's even possible within the legal structure of a SIB, but that's really been our experience of them to date. Unfortunately, because I think there's great potential out there, but it's getting that structure right. I don't know, Mel, if you've got anything to add on that. You're nodding a lot.
I'm happy to come in on SIBs if you really want me to. Sorry, I've been filling up the chat. Sorry, because I can't help it when you start talking about things. It's been really interesting listening in. You're right, Josh, everything you said about SIBs. They are quite complex and they are quite costly. There is if you happen to be in the process of wanting to develop one, there's a great toolkit that we host, but was developed by Think Forward, which developed from a charity's perspective. So I'd urge you to start there, because a lot of the stuff you look at, for instance, from people like Go Labs, that may be focused on the investor side. But, the biggest barrier really to SIBs is having an engaged commissioner, because that's what you need. Actually getting investment to do it is not the trickiest thing. It's having a commissioner who's willing to put in the time and resource. What I agree with you that they've not really, James, sort of taken off in the way that I think government expected them to. And so we're currently involved in a lot of lobbying with government to get some commitment in the future spending review, because what really seems to stimulate SIB demand at the moment is a central pot of government money, some grant to do the early development work, which takes a lot of the cost and complexity out of it or subsidises it, and then it's easier to get commissioners to come with us. So I would keep your eyes peeled. Certainly if we manage to win that argument, we'll be shouting about it, and we'll be pushing the SIB toolkit to make it easier for people.
I'll be up to London to see you.
Oh God, I'm no SIB expert, but I can find you somebody who is.
Thanks, Mel and James and Josh for that. That's really helpful discussion around SIBs. Appreciate it. I'm going to concentrate a few more questions. So Grant and then Candy, and then Ashley has a question around the process and length to register for the SEIS schemes. So Grant, over to you.
Yeah, first of all, I think this is brilliant, honestly, and it's much needed. And I really, I think the recording of it will be so useful for so many organisations that I have conversations with. And you know, Josh, tremendous stuff from you, and it's great to see you again, Mel, and to have you. We're privileged to have you on the thing. And Paul, it's probably a question going back to that slide. I know Mel made a comment on it, but I think that slide you put up with the different options of smaller groups that we all know, really, I think is brilliant. That is exactly what. So my question is related to that, really, and I'm sorry if it's a fairly basic one in all of this, but what do you think you could say to those organisations that are used to grant funding? I mean, clearly, you know, a form of investment needs to be repaid, and it probably is going to come from organisations that is going to need to generate income and a surplus of some sort. So what would you say to organisations that don't think this other forms of funding aside from grants are for them, that would give them the confidence to consider it and to understand that they have the opportunity to be able to pay that back, and it will get them on elsewhere?
I think that's a really good question, actually, Grant. And I think it's being given peer support and guidance from leaders in equivalent organisations who have gone through it, you know, sort of, and sharing their knowledge and their time. And I think also there is something to be said about making sure, or trying to appoint somebody onto a charity board, for example, who can bring finance and commercial experience into the organisation in a sort of non-executive type capacity as well. It can make a huge difference. It can really transform an organisation's level of confidence if the existing membership don't feel comfortable or particularly well versed in commercial activity. And that's what really helped with Aspire, for example, when we set up our trading companies. You know, we brought in we've got three of the directors we brought in had just outright commercial experience, no social sort of enterprise, sort of social justice space experience at all. But that's not what they were appointed for. They cared, they were passionate, and they brought their commercial expertise, and they make a big difference. I'm going to Candy.
Hi, thanks, and thank you. I'm just trying to understand a bit how the different actors all work together. So I'd be really interested to hear from Mel what Good Finance, you just to announce who you are. And I'm also interested in how FX works with the social and sustainable capital. I mean, I just don't understand these different relationships. And it's less about being specific, but more to give me a sense of the sort of different actors in the field. Great,
thanks, Candy. I'm just going to mute you because there's a bit of feedback from your. Oh, that's it. Thank you. Mel, do you want to go first?
Yeah, because that's it's the easiest place to start, because I can do this very briefly. So essentially, we're just a navigation and signposting platform. I know when I pitched up in this world 6 years ago, and I ran a social enterprise before, I found it incredibly complex. There are so many different people doing different things, and I think it is quite challenging when you're running your own organisation to work out who does what. So we are, I'd like to call us a translation platform. We try and take the really, really complex stuff and make it relatable. So we do, what is it? We do practical tools for support, whether that is about case studies, podcasts. I found yours, Paul, actually, and Grant, I found you on SoundCloud, I posted that in. So we do peer stories and learning, but we also do an investor and advisor directory. So Candy, if you want to have a look at how many investors they are, where they work, what social issues they focus on, which bits of lending they do. So, you know, we've talked about secured lending and unsecured lending and social impact bonds, or what amount of money they lend, because we've talked about some varying sums, but on average, the social enterprise requires about £50,000 of unsecured working capital as its like average lending. You can find who's doing what where on a nice mapping tool. And then I'll hand swiftly over to Josh, who can talk to you about how the actors work together. They play nicely, definitely.
They do. They try to play nicely, mostly. I mean, I think there's a really strange thing that in some ways, you know, social finance providers are working together for a common cause, but in some ways they view each other slightly as competitors. And there's a little bit of tension in there. And to be honest with you, to me, it feels like it would be great if the whole space could be a little bit more joined up, actually, because I think there's a real, you know, there's a great model, I think, where, you know, you might get an early stage organization that gets a short-term loan just to get themselves up and running. They don't have the capacity to do a crowdfunding campaign or something like that, but they can go to a social finance provider, get a loan with a view to then refinancing that loan out with crowdfinance 2 years down the line or 3 years down the line, when their capacity is such that they are able to go out and run a campaign, but also because they've got track record then to demonstrate to the crowd. And so my thing, I would like to be working more closely with social finance providers on that sort of approaches. I mean, as Mel says, we have good relationships with everyone. We share pipeline. You know, if something's not appropriate for us, we might bring it to someone else and vice versa. But yeah, it'd be great to see maybe a little bit more of a structured approach, you know, where everything was a bit more joined up, actually.
Brilliant. Thanks, Josh. I'm conscious of time, so what I think we'll do is just finish off the slides, just a bit more to give you some further tips and advice around where to seek more guidance beyond the treasure trove that Mel has shared on the chat, which we will also download and share with participants. So bear with me. I'm just going back to the slide deck. So yeah, so this slide just mentions some of those useful follow-on sort of resources you can go to. Good Finance, Reach Funds, FX, of course. Yeah, there's lots on there. So yeah, we'll share this slide deck with everybody on the back of this. Just want to say a quick shout out for Escalate, the best platform in Oxfordshire right now, of course, to support you with your enterprise journey will be the Escalate programme. And it features one-to-one support, very good webinars I've heard, as well as peer support groups and a county network of enterprise hubs. So you can find out more on the OSEP website. There is going to be a women leaders peer-to-peer session, 4 sessions starting from October. So that's a great learning space that no parts of a training course can really address. So it's that peer coaching from those who understand where you are at. So I think that would be a really good one to consider registering for, obviously, if you qualify by gender for that version. Great. Just say we're going to follow this up, by the way, with some requests for feedback forms. So yeah, we really do value that to keep improving the program. So just a shout out, please, to help us, to help you. If you could fill out those feedback forms when they come through. A few more contact details there around the Escalate program. And then that brings us to the end of the slideshow and just an opportunity for further reflections. So I will stop sharing again. Great. I don't know if anybody, maybe Grant or Ashley, want to say anything from an Escalate perspective, or just give a shout out for any other follow-on webinars or programs that are worth sharing at this point.
I actually just popped it in the chat, Paul, but it's just to say, yeah, there's some brilliant links and resources that you've shared there on the slides, and also that Mel and others have shared in the chat. So we'll make sure we collate those as well and get them up sort of permanently on the OSEP Escalate pages on our website too, because yeah, lots of great signposting there. So thank you for that.
Brilliant, brilliant. So last couple of minutes, is there any more questions or reflections anybody would like to share? Thank you, Kate, for the thanks. Oh, it's nice to see that this has been helpful. And I'd just say, you know, if you do want to follow up individually, Josh is always available. No, it's, I'm very happy to as well.
I am, Paul. You're quite right.
Yeah.
Paul, can I just ask a quick question? It seems as though, as we know, we're working with you and Mr. Green on some stuff around digital inclusion and other things. So it feels like the scalability of social or impact investing would suit a collaborative partnership of a number of organizations that individually might not warrant the time and legal duty and the due diligence process. So how much of the favor of the money would look to kind of adopt a collaborative approach to trying to tackle some of the big issues that are in the national discussion?
That's a good question to pose. Like, how do you potentially group together and have some sort of backbone infrastructure that we can all benefit from? I mean, Josh, have you seen that kind of collaboration of organizations clubbing together to come forward to try and get some sort of investment raise?
What does I say? I mean, I think some of the programs Access are running at the moment might have some quite interesting outputs, actually, and trying to develop kind of innovative approaches that provide the type of finance that works for all organizations, or works, for some organizations. I think social finance maybe doesn't work quite as well as they would like. And part of the issues is wanting something that's maybe more long-term and flexible. And I think there's a desire to develop solutions that are like that. I mean, to my mind, there are, I think community shares is a flexible and long-term solution in one respect, but it's not right for every organization. So, we'll see what comes out of that.
Yeah, and maybe it's a case of you have organizations come together, but there's a clear sort of lead organization that takes on the sort of administrative responsibilities on behalf of the group.
There are some good examples of regional place-based funds, which is essentially where a number of organisations have come together. So you might see that in something like one of Resonance's SITR funds, or if you go back to the roots of Key Fund, the creation of that community development finance institution was a number of organisations coming together. But essentially you could pool money, and also some of the social impact bonds are that way. You just need to think about the reason you'd want to use the money for. Love to see some place-based blended finance funds.
Now you're talking. Yeah, if we could get Oxfordshire Community Foundation and anchor organisations with some cash sitting around in their bank accounts to come together for a place-based Oxfordshire investment funds, that'd be amazing.
Can I just clarify? I think what Josh and Mel were just talking about was the funds coming together, whereas what I'm thinking of is, especially now we're speaking, having conversations with the county council, and some of the big themes go across the county, and therefore if you've got local experts with local knowledge of communities and individuals and specific issues, you sort of begin to have a much more meaningful sit around the table with the commissioner if you're working as a collective group of service partners that then say it's an issue for you and all the districts, but what we need is a collective voice and a collective capability that together attracts a much larger fund of money, because it's a bigger, longer term program of work that could against that put out, or rather create a very viable alternative to Serco, Capita, G4S and Atos, who I'm sure is sitting waiting for COVID to go away and all the old contracts to come out again. But I think the VCS as a collective has a much stronger part to play if we work together and have the sort of funding behind us.
Yeah, there's that cool, Grant's well versed in the proposal around an alliance model for the VCS sector. I think there's that shift in contracting tenders as well. So you look, Oxfordshire councils have all clubbed together the first time ever to pool all their funds around homelessness support, and are asking for an alliance of organisations to respond to that tender locally. So that's an interesting shift that could be mirrored around other sort of like place-based funding approaches. So yeah, I think it's a good point to leave it there, though. That's a one to watch, and just want to say a big thank you to Josh in particular for taking the time to share his insight and expertise.
Well, thanks, Paul. It's been a pleasure being on here and chatting away. So no, thank you.
Brilliant. So yeah, thank you everybody. Please do fill out those forms and send them back in, please. And otherwise, thank you so much for sharing your time as well. And See you again soon, hopefully in real life. All right.
Thank you.
Bye, everybody.
Bye, everyone. Thank you.